When it comes to the ever-changing environment of personal finance, securing a loan can be an essential lifeline for a tremendous number of people who are dealing with unforeseen bills or who are working toward significant life goals. It is important to note that the process of obtaining a loan may frequently be intimidating, particularly for individuals who have a short credit history or credit scores that are less than excellent. In the United Kingdom, there are numerous loan options available to meet a wide range of financial requirements. It is necessary to have a solid understanding of which loans are the most straightforward to obtain approval for. By throwing light on the elements that influence approval and the types of loans that are generally more accessible, the purpose of this video is to provide a thorough reference to the loans that are the easiest to obtain in the United Kingdom. Number 1. Personal loans. Individuals who are looking for financial assistance often turn to personal loans because they are a diverse and popular choice. They are versatile and can be utilized for a variety of purposes, including the consolidation of debt and the coverage of unforeseen needs. Personal loans in the United Kingdom are normally unsecured, which means that they do not require collateral to be provided. This extends their availability to a wider variety of people, making them more accessible. The borrower's creditworthiness is evaluated by the lender based on a number of characteristics, including the borrower's income, employment position, and credit history. Maintaining a strong credit score is essential in order to increase the likelihood of being approved for a personal loan. Personal loans are available to persons with lower credit scores from certain lenders. Nevertheless, individuals with higher credit ratings are more likely to enjoy better interest rates and loan terms than those with lower credit scores. Individuals who have a low debt-to-income ratio, a secure employment situation, and a consistent income also have a better chance of being approved for a loan. Number 2. Guarantor loans. By having a guarantor co-sign the loan agreement, guarantor loans are designed to serve the purpose of assisting persons who have a limited or non-existent credit history in obtaining a loan. A friend or family member who is willing to repay the loan in the event that the borrower defaults on the loan is often referred to as a guarantor. Through the provision of an additional layer of protection for the lender, guarantor loans become more available to individuals who have a limited creditworthiness. One of the most significant benefits of guarantor loans is that they make it possible for people who have a poor credit history to obtain monies that they might not have been able to obtain otherwise. Nevertheless, it is of the utmost importance for both the borrower and the guarantor to have a complete comprehension of the implications of this arrangement. This is because any violation of the loan can have an effect on the credit ratings of both parties. Number 3. Payday loans. As a means of bridging the gap between paychecks, payday loans are loans with a high interest rate and a short repayment period. Because of the speed with which these loans are approved, they are a well-liked option among those who are dealing with issues that require immediate financial assistance. However, the availability of payday loans comes with a big drawback, which is that the interest rates on these loans are substantially higher. As a result of the fact that payday loans require only a small amount of credit checks, consumers should exercise caution while applying for these loans. It is possible for payday loans to result in a vicious cycle of debt if the high interest rates associated with these loans are not managed carefully. Before picking a payday loan, it is essential to determine whether or not the repayments are within one's financial means and to investigate other options. Number 4. Doorstep loans. Doorstep loans, which are sometimes referred to as home credit loans, are a sort of personal loan in which a representative from the lending firm comes to the dwelling of the borrower in order to discuss and handle the particulars of the loan. Individuals who have poor credit scores or who may have problems obtaining standard banking services are typically the ones who are targeted by these loans. Face-to-face interaction with a representative and the ease with which the application process can be completed are two of the factors that contribute to the accessibility of doorstep loans. Nevertheless, borrowers ought to exercise caution because the interest rates that are associated with doorstep loans are significantly higher. It is absolutely necessary to give serious consideration to the terms and circumstances of this kind of loan before making a commitment to it. Number 5. Bad credit loans. People who have been turned down by traditional lenders are the target audience for bad credit loans, which are loans that are developed specifically for people who have terrible credit records. Due to the heightened risk that is associated with lending money to people who have a history of having financial troubles, these loans come with higher interest rates and terms that are less advantageous. Despite the fact that loans for people with poor credit may be easier to obtain, consumers should approach them with caution. In order to discover the most fair terms, it is vital to conduct extensive research and compare the terms offered by various lenders. In addition, taking measures to enhance one's credit score over the course of time can increase the likelihood of gaining access to loan options that are more inexpensive in the future. Number 6. Credit union loans. Loans and other financial services are provided to members of credit unions, which are cooperative financial institutions that are owned by their members. When compared to typical banks, these institutions frequently have a community-oriented approach and may have more permissive lending standards than the larger financial institutions. Individuals who are members of the credit union have the opportunity to obtain loans through the credit union, which serves as an accessible option. Increasing the likelihood of having a loan approved is possible by becoming a member of a credit union and developing a positive relationship with the organization. It is also possible for credit unions to provide members with financial education and support in order to assist them in efficiently managing their finances. Although credit union loans may be easier to obtain, the conditions for membership might vary, and consumers should make sure they check the eligibility requirements ahead of time. Number 7. Secured loans. Loans that are secured by an asset, such as a home or a vehicle, are referred to as secured loans. These loans are secured by the asset. Due to the fact that the lender has a tangible asset that can be repossessed in the event that the borrower defaults on the loan, these loans are typically easier to get. But this ease of approval comes with considerable dangers for the borrower, as defaulting on a secured loan could result in the loss of the collateral. This is a risk that the borrower must take into consideration. Individuals who consider themselves to be in possession of significant assets and who are confident in their capacity to repay the loan may be eligible for secured loans. Before agreeing to this kind of financial arrangement, it is essential to conduct a thorough analysis of the terms, interest rates, and potential hazards that are involved with secured loans. Individuals in the United Kingdom who are in a variety of various financial situations can choose from a variety of loan options. Getting authorized for a loan is a process that is influenced by a number of factors, including your credit history, income, work status, and the sort of loan that you choose to apply for. There are a variety of loan choices accessible, including personal loans, loans with guarantors, payday loans, doorstep loans, loans for people with poor credit, loans from credit unions, and secured loans. Despite the fact that certain loans are intended for people who have ideal credit, there are still loans that make it possible for those who have credit that is less than perfect to get the financial aid they require. In order to ensure that they select the loan that is most suitable for their requirements and financial capabilities, it is vital for borrowers to thoroughly examine their current financial status, take into consideration the terms and conditions of each loan option, and make decisions based on comprehensive information. Furthermore, careful borrowing, timely repayments, and working to enhance creditworthiness over time are all factors that can lead to a more secure financial future.